golden phase that is part of this uptrend, where we're looking for a series of higher highs and higher lows. It's that simple. We've been looking for the higher low situation to set up. This could be the beginning of that. As I've stated, the obvious targets that we're looking for are around these areas, right? Golden pocket retracement, basic level stuff. Now, if this is a particularly bullish uptrend, I wouldn't expect the price to get below the 618 down to the inverse 702. I wouldn't necessarily expect that. If this is a highly bullish uptrend, it's more likely to head down to the 0.5, more likely. So it's one of those deals where you want to gradually be accumulating, and you can look at this inverse Fibonacci as one of those kind of areas to be like, okay, where are the highest probabilities of reversals? And the farther you go down, the higher the probability of a reversal becomes. But there's no guarantee that you're going to make it all the way down to the inverse 702, right? So you want to start thinking about accumulation probably around that 0.5 level. I think around that 23,500 level is a place where you should feel comfortable accumulating cryptocurrencies. At least I will feel comfortable accumulating cryptocurrencies. So looking around at the rest of the market, it's actually the NASDAQ that's kind of showing another clear uptrend, as I've discussed, right? You have a series of higher highs and higher lows. We've got what we needed. I was saying that we just need to establish an obvious uptrend. That's exactly what we've established. Now the next phase in that uptrend is likely to set a higher low. So it feels like that's where we're heading into. Now, that's not to say that this market can't literally explode to the upside into these areas before setting a higher low. That's very possible. But at this time, we've got what we need to feel comfortable saying that this is an uptrend, at least on the NASDAQ and at least on Bitcoin. Now, it's not as clear on the S&P 500. Look at this. You don't have a clearly defined uptrend yet on the S&P 500, right? You haven't broken above that January 30th high. So what does that mean? Are we going to break above it? Or maybe the S&P 500 is relatively weak compared to the NASDAQ. There's two ways of kind of looking at that. I personally suspect that we actually probably can go a little bit higher and actually confirm a higher high here and even potentially head up to the 618, which would be a big move to the upside, right? That would catch a lot of people off guard because I think most people are sort of expecting that we're at that part of the trend where it's going to start to move back to the downside. But it seems very possible because Bitcoin is clearly in an uptrend, NASDAQ is clearly in an uptrend. I feel like the S&P 500 is going to want to establish itself in an uptrend as well. If it doesn't, that's another conversation. But all things considered, in the way that I'm kind of looking at the schematic for 2023, to me, it makes the most logical sense that the S&P is going to put in a higher high up here, and potentially that could be around the 618. So that's what I'm looking for. But as I've already said many times in the past, 3 weeks worth of videos, I don't remember how long I've been saying, this is where I'm accumulating VIX, right? So I'm already prepared for the market to dump, very much prepared to make money in the event that the market dumps. Now, there's no guarantee that it's going to dump now, which means I'm early to be accumulating VIX call options, but they don't expire until September. So I'm taking a large bet that between now and September, the market will dump. If the market dumps between now and September, I'm expecting a decent sized move on the VIX, which will be insanely profitable for me. And that will also coincide with whatever dip we're seeing in the crypto market and in the stock market. And that's, like I've said many times, that's an obvious accumulation in the same way that this was an obvious accumulation. This back test of this trend line, coinciding with this back test and even slight break below this trend line, I said that was the biggest buying opportunity of 2023. That is still true. And I don't think we're going to see prices below this area, below 390 on the SPY, before we see higher prices and potentially significantly higher prices. I'm not going to speculate how high they may go, but I do think 2023 is going to be a year that's defined by a highly volatile uptrend. I just think we're coming into the phase where that uptrend is going to set up a nice pullback. It could be a really scary, powerful pullback when you consider what's going on in the world with the debt ceiling. I really think that could be some kind of major catalyst to send this market down in a big way, cause some major panic, and that's why the VIX is such an obvious play for me leading into the debt ceiling thing. So think about it. If I'm holding VIX call options that expire in September, we're hearing that the United States is going to run out of spending power on June 1st. What do you think is going to happen to those VIX calls before September? Probably going to be a pretty basic, obvious trade. And if I haven't really emphasized this enough, I will sort of go back to what happened just at the last debt ceiling, just to kind of give you guys a reminder here, because that's one of the schematics that I have in mind at this phase of the market that we're in. So I showed last week, I'm reminding you, this is all sort of reminding you. So July 31st, 2011, Obama announced basically they came to the agreement and they dealt with the debt ceiling. They raised the freaking debt ceiling. What else would they do? On July 31st, 2011. So if we look at the SPY on, the week of July 31st, that's right here. That's where this huge dump happened, right? Obviously a massive VIX spike, obviously serious panic. And this panic occurred on the day that they came to the agreement to raise the debt ceiling. So the market is frothy all the way leading into that moment. No one really expects anything bad to happen, especially because it's like, oh, we came to agreement. Everything's fine, blue skies. And then the market dumps, right? So this could definitely drag out leading into the exact moment that Republicans and Democrats come to the agreement to essentially raise a debt ceiling, because that's what they're going to do, right? I mean, what are they not going to raise it? Hey, maybe they don't raise it, and maybe I become a disgustingly rich legend for buying VIX calls on the one time that they don't raise a debt ceiling and the VIX spikes to literally levels unheard of. Literally, I make 100x on that investment. Maybe that's going to happen. I doubt it, though. I doubt it. And the fact is, I wouldn't even be holding all of my call options into that, into the stratosphere. I'd be unloading them, as soon as I'm around these areas, right? I'm already making a ton of money. I'm unloading, but I have a lot of those call options, so I don't have to unload them all at once. I'm going to ladder out. But let's just say in the event that Congress doesn't raise a debt ceiling and the U.S. defaults on the majority of its obligations, well then, yeah, you could expect the VIX to break the freaking sky. You know what I mean? That's very possible. And that's once again why I'm already holding a large VIX position, because you can't rule anything out. I think that's probably a 1% chance that we have mass calamity because Congress doesn't raise a debt ceiling. More likely, they raise the debt ceiling at the last freaking second, and everyone's going to think everything's fine because Congress raises a debt ceiling, and then literally the next day after they raise the debt ceiling, that's when the market dumps. That's what happened in 2011. It's just the classic situation where you think you made it through the weeds and then the nightmares hit, right? So that's kind of where my mind's at, and I think the big pullback dip situation that we can expect to see taking shape over the summer is going to be related to the debt ceiling. And it's going to be like this, right? Just big consolidation, basically all through the summer. And then what happens? Fall comes and pow, like you're out of there. You're rocketing to the upside, right? Like I said, I don't know if we're going to rocket to the upside for 12 years straight like we did after the last debt ceiling situation. I can't say that with any certainty, but I can say that it feels very likely that the market will be strong after the debt ceiling resolution, because what are they going to do when they raise the debt ceiling? Well, basically two things. They're going to print a whole bunch of money because that's where they're going to get their spending cash from. So, happy liquidity season, right? And then also, they're very likely going to keep interest rates where they are or even lower. than they are. And if they're lower, well, then that's another crisis waiting to happen. And that could be related to any number of things, banks, you name it. Any number of reasons could force the Fed to lower interest rates, but all of those reasons would be bad. They would be crisis signals, right? So in the best case, the Federal Reserve keeps interest rates flat, through the summer into the fall, and we do see something like this, right? And then, the next step would be they lower interest rates. That would be the most expected thing, but it would be a signal that the market is very unhealthy. Now, if they raise interest rates again after pausing, that is a scenario you have to consider. The market would not like that in the short term. It would cause another major VIX spike. It would be very unexpected, but it has happened before. It did happen around the tech bubble where they flattened and then they raise again. The market doesn't like that, obviously, but it's a sign that the market is healthy, right? When they lower interest rates, that's a sign the market is weak. When they higher interest rates, that's a sign that the market is healthy. So when we're coming into the phase where interest rates are at least being discussed that they can go lower, you got to have your caution signals up. But the point is, if Congress is going to raise a debt ceiling, it's unlikely that the Fed can continue to raise interest rates when you're $33 trillion in debt. That's kind of the simple way of looking at it. And so if you consider, there's a 99% chance that Congress is going to raise the debt ceiling, well, that really forces the Fed to keep interest rates where they are and not really raise them. And once again, that's one of those signals, just like every time we've seen in history, it's one of those signals where it's like, in a broad sense, the U.S. economy is not healthy. It's living on debt. That's not healthy. So the cycle is repeating. As you can see, interest rates are starting to flatten at the exact moment that they need to, because the United States is in a position where they need to continue to borrow money in order to survive, which is not a good thing. So once again, it's just the idea that when interest rates start to flatten or start to come down, it's not a good sign long term, or even just in a general macro sense. It's not a good sign. That means something is rotten under the hood. And what is rotten under the hood is that the United States is in so much debt that they literally have zero spending cash to their name unless they're willing to take on more debt. So that's not good, right? So it's like classic interest rates starting to flatten. United States doesn't have any money. It's, it's like basic stuff, right? So what I'm saying is the schematic that I'm kind of leaning on is this little moment in stock market history, right? Kind of a big dump leading into the debt ceiling stuff, some large consolidation, and then fall comes around and this market picks up, and no one really expected that to happen, right? And of course, I'm positioned for all variations of that schematic. Like, I already have my positions in place in case things happen sooner or things happen later, whatever. The way I look at it is I'm looking to capture the most profit on whatever happens, and I can use both directions of the market to do that. Of course, long term, and by long term, I mean like 6 to 12 months, I'm holding cryptocurrencies. I'm looking to buy some dips here. And in the time that crypto's dipping, there's a lot of money to be made on the short side or on the long side of the VIX, which is the short side of the broader market. And of course, all that money would be capital that I'm going to use to load my crypto bags, because I do think in 2023, or maybe it's going to drag into 2024, we're going to see crypto do some epic stuff. And that's why it's in this uptrend right here. That's why we're already seeing a monstrous, undeniable, clearly defined uptrend in crypto. And that's leading the broader market, right? Realize, look at this with your eyes really quickly. Look at this with your eyes. Look at this uptrend. It's undeniable, right? And the fact that you broke above the August 2022 highs considerably, that's just adding credibility to this uptrend. Like, this is a very valid and important uptrend on the weekly chart. And we look around at the other markets, we look around at S&P 500, and we don't see quite as strong of an uptrend. That's really interesting. So it's like NASDAQ and crypto are showing relative strength right now, and I think that's telling you that we're going to see some kind of major risk-on move take shape potentially at the end of this year. Maybe that's October, November, or maybe it's Q1 2024. I don't know, but this uptrend that we're seeing in NASDAQ, this uptrend that we're seeing in crypto, that is foreshadowing a very bullish phase that's likely to be coming probably after the summer, after we get through the debt ceiling dip. Let's call it the summer debt ceiling dip. That's, I think, what's taking shape. If that does take shape, just like I did back here on the S&P 500, the schematic that I was looking for, it took shape exactly the way I wanted. You backtest the trend line, I loaded up, and boom, making tons of money, right? I think the same thing is happening, right? So we're going to see some kind of dip here. That's what I'm looking for. When I see what I'm looking for, I'm going to act, right? So that's it. That's the schematic. That's what I got for you. I hope that's really helpful. I hope you guys are killing it. And I hope you're paying attention to gas station mentality because, man, that's going to be happening like at the same time we're all making a ton of money on, altcoin season of October 2023. Maybe it'll all happen at the same time. Maybe not. Doesn't matter. Good.